I'm going to show you why Tesla stock is worth a lot more than what Wall Street is telling you. Are you ready? Let's go. We keep hearing people saying that Tesla stock is overvalued. They're wrong. Long-term investors don't look at how many cars Tesla will sell in the fourth quarter of 2020 or the year 2020. That's short-term thinking. We don't look at short-term graphs to look at what the range is that the stock is trading in. Again, that's short-term thinking. We don't worry about what the bump is from Standard & Poor's 500 inclusion either. Again, that's a short-term thing. Maybe some meaningful value in it in the medium term, but long-term, that doesn't matter. Long-term thinking means you think about what Tesla will be worth in the future. Look out 5 years, look out 10 years, look at the business. What will they be making? What will they sell? How much is that worth? How much profit does that generate? And how does that translate to market capitalization, the value of the company, and share price? This gives us future value. And we can use future value to figure out what the stock is worth today. Once we have future value, once we have some idea what we think the future value will be, we can use what's called a discount factor to track back and say, this is what I think the stock should be worth today based on what I think it's going to be worth 5 years from now, 10 years from now, whatever, long term. The first thing we're going to cover is how do we figure out future value for Tesla? And I'm going to pick 2030 as the year we're going to look at, 10 years from today. What is Tesla likely to be worth in 2030? Now, there are many different ways to look at this, and it's not easy, but I'm going to try to show you how you can think about this. Let's start with an extremely optimistic scenario. This is going to be fun. What if Tesla goes all in on robotaxis? 2023, 2024, Tesla nails the robotaxi. And they start producing robotaxis in volume and more robotaxis. And they don't sell them to people. They keep the robotaxis and they keep them in their own fleet. And they run them as their own robotaxis and they make all the profit from each robotaxi. This model delivers the biggest, most outrageous numbers and the highest value for Tesla as a company and share price. In this model, we start with Tesla building 2 million robotaxis a year in the year 2023, and then that increases 50% a year every year out to 2030. Again, the company keeps all the robotaxis in its own fleet and runs them as its own fleet. Now, in this model, Tesla does not sell robotaxis, whatever models they're making for robotaxis, they don't sell them to customers anymore. Basically, Tesla either stops selling cars completely or they dramatically reduce the number of cars they sell, or they just don't increase the number of cars they sell. They focus all new model production, all the new things they're making on the robotaxi network. A lot of people don't like this model. I've talked about it before and people say, no, Tesla needs to keep selling cars. You don't like the idea that Tesla would stop selling cars or charge an outrageous price for cars that you can't afford because you think Tesla should sell you a car at a price that you think is fair. This is why I'm wearing the "It's Not About You" t-shirt for this video. Investing is not about what you want. It's about what works. Tesla running cars in its own robotaxi network is the most efficient use of those vehicles. It generates the most revenue for the company, it generates the most profit for the company, and it does the most to accelerate the transition to sustainable energy, which is Tesla's mission. Selling cars involves high transactions costs. Keeping the cars lowers those costs. Managing a network of privately owned robotaxis involves revenue sharing. You got to share the revenue with the people who own the cars. And it involves more transactions costs. Keeping the cars themselves increases the revenue and profits that Tesla makes, and it reduces the overall costs of everything. For a private individual or small company, operating a small number of robotaxis has relatively high maintenance costs and operating costs. If Tesla keeps all the vehicles in-house, they get tremendous economies of scale. They will find ways of operating more efficiently than you or I could possibly do if we were running our own vehicle as a robotaxi. This further reduces the cost of operating the robotaxi, and it increases the profit for each robotaxi and for the company as a whole. Now, this is an oversimplification. Any model is an oversimplification. But to oversimplify it, let's think about Tesla just building the 2023 Tesla Compact that they announced at Battery Day. and they're just going to build a lot of them. They're going to start with the 2 million, and they're going to expand and keep building and building and building them. What's more likely in reality is it will start with a combination of Tesla Model Ys and Tesla Model 3s and the compact Robotaxi, and there'll probably be a Tesla minibus, and there may be other vehicles. Cybertruck will play a role in this. But just to keep it simple, we're using, in the idea, it's just one vehicle that's running Robotaxi service. In reality, of course, there would be a variety of Robotaxis serving a variety of needs. Just trying to make it simple, to come up with a simple model. That makes it easier to explain and understand. I've done this where you make the model more complex. I'm not doing it here. If you make the model more complex, you end up with roughly similar numbers. It doesn't change a lot. In fact, in reality, it probably makes things more profitable because Cybertruck will be able to make more money running cargo runs. And the minibus makes ridiculous profits because the costs are so low per passenger that they just make a ridiculous amount of money. So this oversimplification really, to some extent, gives you more conservative numbers. So you can see in the model here, we start with 2 million and it grows 50% a year. That's also an oversimplification. What I think is more likely is the early years are going to see much more rapid growth. You're going to see the compact produced initially in just one factory, and then all of a sudden it's going to be produced in 5 or 6 factories. So the early years of growth are going to be much, much higher. And then as you get later on in years, you're probably going to see a tapering of that growth. But just for simplicity's sake, it's easier to model this with just 50% a year. Again, you could make it more complicated, but you end up getting roughly similar results. What really matters for the model is where we get to in 2030. Now, it's important to note here that each year the fleet grows. You take the vehicles that were produced in 2023 and you add the 2024 produced vehicles to the fleet. So you go from 2 million produced in 2023, you add another 3 million in 2024, and you get a total of 5 million. Then the next year you produce 4.5 million vehicles. That's the 50% increase. You add the 4.5 million to your existing fleet of 5 million, and you've got 9.5 million vehicles in the fleet. You keep going and you keep going, and out in 2030, you end up with nearly 100 million Robotaxis in the fleet. Now, one of the other things I've done in the model, as you can see, is that every year the price of riding in a Robotaxi drops. You start in 2023 with ballpark $1 a mile for the rider. The vehicle is only carrying riders roughly 60% of the time. That's an estimate. I think it's going to be better than that, but you go with that and you end up with 60 cents a mile in revenue. And the cost of operating the vehicle, everything together, works out to about 10 cents a mile. What we're going to see over time is that the Robotaxis get more efficient. As Robotaxis increase in market share, as they grow, as they serve more people, the price inherently comes down. And when you get out to 2030, you're seeing a price of around 60 cents a mile or less, which is the point where more than half of people find it less expensive to ride in Robotaxis than to own their own car. A lot of people have trouble with the idea of riding in Robotaxis and giving up their own car. They think that, oh, I would never do that. It's too important to me to have my own car. I feel like people aren't getting the value of the Robotaxi world, the benefit it brings to people, the convenience and the money saving. Once you get the price down to around 60 cents a mile, it becomes cheaper to ride in Robotaxis than to own your own vehicle. And not only is it cheaper, it's so much more convenient. You never go to a gas station and you don't even need a charger in your garage. You never change the wipers. You never rotate or replace your tires. You never have to check your air in your tires. You never have to fill the air in the tires. You never have to shop for car insurance. You never have to shop for a car. You never have to try to trade in or sell an older car. You don't worry about parking. The Robotaxi drops you off at the front door and picks you up at the front door. You never have to wander around a parking lot trying to figure out where you parked in the rain or snow or ice. The car is never too hot or cold when you get in. You never have to scrape ice off the car or clean snow off the car. You never have to get your car washed. There's no range anxiety for people who own EVs. There's no range anxiety anymore. If your Robotaxi gets a low battery, you just summon another Robotaxi, or the network automatically summons a Robotaxi for you, and you hop into a freshly charged Robotaxi and go on. Most importantly, you don't have to drive. You can do other things while the car takes you where you want to go. It's just a much more convenient world with Robotaxis than it is owning your own car. So looking at 2030, each Robotaxi drives 100,000 miles a year. That's true for the entire run from 2023 to 2030. it's about 300 miles a day. Each Robotaxi earns revenue on 60% of those miles. Again, I think this is an underestimate of how efficient the Robotaxi network will be at optimizing cars and how they're routed, but we'll go with 60%, I think is a conservative number. That works out to 35 cents a mile of revenue, or $35,000 a year of revenue. By 2030, with these hyper-efficient robo-taxis running very well and everything working out, it's going to end up costing about 4 cents a mile for these vehicles to run over that 100,000 miles. I actually think this is also conservative. I think the 2023 compact may already be close to 5 cents a mile in costs. You can see my video about that here. But it's going to cost about 4 cents a mile, including everything: maintenance, electricity to charge the batteries, amortizing the vehicle, etc. So now when you take the 35 cents in revenue per mile and you drop out the 4 cents of cost of operating the vehicle, you end up with 31 cents of profit per mile, or $31,000 a year in profit on that 100,000 miles the vehicle drives. Now you multiply that by the 98 million or nearly 100 million robo-taxis that Tesla has accumulated in its fleet by 2030, and you end up with profit of $3 trillion. $3 trillion in profit in the year 2030. Now keep in mind, this model ignores all profits from any other aspect of Tesla's business. This is ignoring all the profits that Tesla could earn from Tesla Energy. This ignores all the profits that Tesla might earn from selling Model S, Model X, Model Y, Model 3, what other vehicles it might sell. Powerwall, solar roof, Megapack, etc. None of that profit, none of that revenue is considered in this model. This is a gross oversimplification. If you were to start thinking about how much profit is Tesla Energy generating, you could get even bigger numbers than the number I'm talking about here. This also ignores profit from selling in-car entertainment, other services in the car. I figure robo-taxis will have vending machines in them where you're a passenger, you can get a cup of hot coffee, you can get a cold soda, or maybe even a snack. All of these things are ways that Tesla could get extra money, or a robo-taxi operator could make extra money out of running their vehicle. But I'm leaving all of that out, and we're just going with, you're making this much money taking rides, let's go with that, and you end up with $3 trillion in profit. I get criticized a lot for my $3 trillion number. The fair criticism is that in a sense this is gross profit. This is really EBITDA, EBITDA, earnings before interest, taxes, depreciation, and amortization. But that's not completely true, because we've already considered depreciation and amortization of the vehicles in the model. And interest doesn't really matter because Tesla does not have a lot of debt now, and it's not going to need any debt later. So it's really just taxes. Taxes are real, and they're hard to predict, and they could be substantial. At some point, as profits skyrocket, politicians will try to get their greedy hands on as much of that profit as they can. But let's look at this from an environmental perspective. EVs are a positive force for the world. Not only do they make the environment better by radically reducing pollution, CO2 emissions, etc., from an economic perspective, they also lower the cost of transportation, making life better for everyone, and improving the economy, making the economy more efficient. When you lower the cost of transportation, you make the economy run better. So if you're worried about taxes here, it's very important that we work hard and we fight to keep politicians from what they would try to do, which is interfere with the success of Tesla making our world a better place. Now, we could adjust the model by taking something off for taxes, but don't forget, we left out Tesla Energy and we left out all other kinds of revenue and profits that Tesla might generate in 2030. So for purposes of this approach, I'm going to go with the $3 trillion. We're going to look at smaller numbers later anyway to get more conservative estimates. This is the extreme optimist scenario, so let's go with it as an extremely optimistic scenario, and we'll adjust for that later when we look at other scenarios. Now, you take that $3 trillion in profit and you combine that with something called the price-earnings ratio. The PE ratio is something that is commonly used when you evaluate stocks. If you do a Google search for AAPL or TSLA or any particular company, you will often see in the result the PE ratio is listed there. So a company that isn't growing much or not growing at all would have a lower price-earnings ratio. Allstate Insurance has a PE ratio of 7.5. But a company that's successful and growing is going to have a higher PE ratio because the people who are buying stock in the company, with seeing that growth, expect that the earnings will grow in the future, and they're willing to pay more now because they anticipate growth in the future and greater earnings in the future. McDonald's has a price earnings ratio over 30. Apple has a price earnings ratio over 40. And Amazon has a price earnings ratio over 90. So let's go with a PE ratio of 33 and a third, which is really about where McDonald's is. And you apply that to a $3 trillion profit, and you basically get a $100 trillion market cap. That means Tesla as a company would be worth $100 trillion. Now, for context, the largest publicly traded company in the world right now is Apple Computer, that is selling at about $2 trillion. So it sounds crazy to think Tesla would be worth $100 trillion in 2030. But in 2010, if you had told people Apple would be worth $2 trillion, they would have thought that was crazy too. And this $100 trillion market cap means a share price of $100,000 a share, which is a lot more than the current share price of around $700 a share. That's a more than 100x increase in the share price. I know this sounds crazy to people, but again, this is the extreme optimist scenario, and we're going to look at other things along the way, and we're going to come back to numbers that are less. This is just to set the high bar where this could conceivably go. I've suggested this model before, and I get a variety of criticism, including what I discussed earlier about taxes or about people wanting to own their own cars instead of having Tesla running as a Robotaxi network and not selling cars. Other less thoughtful criticisms come along the lines of, well, Tesla can't possibly get that big. That's not possible. No company could be worth $100 trillion. Nobody thought Apple could be worth $2 trillion. People say, well, that's more than the United States gross domestic product, GDP. Well, who cares? First of all, Tesla is a global company. It's not limited to the United States. In the long run, it's probably going to do more business in China and do business all over the world. It's already doing business all over the world, so why limit it to the United States? And number two, market cap and GDP are not the same thing. Market cap is the total company value, and GDP is like income. It would be more appropriate to compare profit to GDP rather than market cap. And then you don't really have an issue anymore. Another fairly sound criticism is that antitrust authorities will break up the company. Yeah, I think there's certainly a chance that Tesla becomes an effective monopoly and antitrust authorities somewhere or other try to come in and break the company up. I also think Elon Musk is smart enough and the Tesla team is smart enough. They might break up the company before that happens and create a Tesla Europe, a Tesla China, a Tesla US. They might spin off the Robotaxi network as its own entity. But whatever they do, if you own shares in Tesla now and they spin something off, you will own shares in that new entity too. That's what happened when 3Com spun off Palm. I owned 3Com stock. And when they spun off Palm as a separate company, now I own stock in 3Com and Palm. One of the dumbest comments I get is, well, they'll split again and that'll change the share value. So what? If they split 10 to 1 and you had $10,000 in Tesla stock, now you have 10 shares of $1,000 each in Tesla stock and you still have $10,000. I don't know why people bring up that criticism all the time. One criticism sounds a little better. Well, there isn't a big enough market to sustain 100 million robotaxis. You might think that, and I think you'd be wrong. There are 2 billion vehicles in the global fleet, 2 billion cars and trucks in the global fleet. And optimistically, a robotaxi is going to replace somewhere between 5 and 8 vehicles. Let's go with 5, that's the number Elon uses. So 100 million robotaxis replaces 500 million vehicles, and that's still only a quarter of the way to replacing the global fleet. And that doesn't include the fact that the economy is growing, the number of vehicles in the fleet is growing. So by 2030, the global fleet might have been 2.5 billion, and we're only starting to make a dent by getting to 500 million robotaxis. Also, because robotaxis are going to so dramatically lower the cost of transportation and make transportation more convenient for people, what normally happens when you lower the price of something and make it more attractive is people consume more of it. There will be more people taking more trips, so there's even more of a market for robotaxis. Looking at all these criticisms, none of them really address the simple model I laid out. Either you believe that Tesla is going to be able to grow the fleet and expand and build all these robotaxis, or you don't. If they're able to do this, and this is the highest profit way to go, and it accelerates the transition to sustainable energy, this is the thing that makes the most sense. You don't accept the model or its premises, okay, but what's your model? What are your premises? Don't just argue with the math. The math is straightforward. This is where it takes us. Even if you slow it down a bit and you say, you know what, 50% growth a year is unreasonable, and you say, okay, it's 30% growth a year. Is that unreasonable? I mean, at some point you got to pick. Tesla's been growing pretty fast, so 30% growth is clearly not unreasonable. They've been operating with 1 or 1.5 factories in 2020 with some limits because of COVID. And now in 2021, they're going to be scaling up to 4 factories. By 2022, they're going to have 4 factories going full bore and maybe other factories getting ready to come online. That's more than doubling in 2 years. That's looking like 50% growth. And I think Tesla's going to keep growing. But if you go with 30% growth and you take that out to 2030, you still get 47 million robotaxis and a ballpark of $1.5 trillion in profit. And you get a $50 trillion market cap instead of a $100 trillion market cap and $50,000 a share. The number's still outrageous. Okay, so that was the all-in robotaxi model, and that gives us the ridiculous number of $100,000 a share, or if you want to say 30% growth, $50,000 a share. Crazy, but it's not out of the realm of imagination, is it? So now let's look at a more conservative model. Still, you're going to still see big numbers, but a more conservative model. I call it the battery revenue model. This is one of my most popular videos on my channel, the battery revenue model. At Battery Day, Elon Musk and Drew Baglino explained Tesla's plan to grow to the point of producing 3 terawatt hours of high nickel batteries in 2030 or sooner. At the same time, they said they would continue to buy batteries from suppliers and partners, Panasonic, CATL, and LG Chem, and they have been expanding those partnerships as they go. The suppliers would provide nickel manganese batteries and iron phosphate batteries. So let's assume Tesla produces 3 terawatt hours of batteries in 2030, and they buy another 3 terawatt hours of batteries from their suppliers. That means Tesla will create and sell products containing 6 terawatt hours of batteries, 6,000 gigawatt hours of batteries, 6 million megawatt hours of batteries, 6 billion kilowatt hours of batteries. I gave a lot more detail on the battery revenue model in this video, but let's oversimplify it radically. Suppose Tesla just made the Tesla Model 3. This is wrong, and of course, the world is much more complicated than that. But we're using Model 3 as a proxy for all Tesla products, all Tesla vehicles, Powerwalls, Megapacks, solar, etc. When I did my model, I found that most Tesla products ultimately work out to producing revenue of $600 to $800 a kilowatt hour. The Model 3 is in the ballpark of that range. So it's a reasonable proxy. Let's see where this goes. So if the average Model 3 has a 75 kilowatt hour pack, which is basically the maximum size of the Model 3's pack now, and they use 6 terawatt hours of batteries to produce Model 3s in 2030, that would be 80 million Tesla Model 3s. Now, I know that sounds crazy, but again, we're using this as a proxy for all the products that Tesla's going to produce. I'm not really suggesting they're going to produce 80 million Model 3s. This is a proxy for Powerwalls, Megapacks, Model S's, compact robotaxis, minibuses, etc. If the Model 3s have an average selling price of $40,000, that works out to $3.2 trillion of revenue. You might have trouble with the $40,000 average selling price, but currently the lowest priced Model 3 with a 75 kilowatt hour pack costs $47,000. And that doesn't include things like full self-driving and options. The average selling price of Model 3s today that are 75 kilowatt hour packs is probably closer to $55,000. So this is a big drop from the current average selling price of Model 3s with 75 kilowatt hour packs. Now we could go from here and try to determine profit and then use the PE ratio, the price earnings ratio. But instead, it's easier to just go from sales, from revenue, and go to a price to sales ratio. Apple, for example, has a price to sales ratio of over 8. If we use 8 here, we get a market cap of over $25 trillion or a share price of just over $25,000 a share. Now, of course, we get the same complaints about taxes or that's too big for GDP and so on and so forth. But remember, Apple's price to sales ratio is 8, so it's not crazy to say Tesla's price to sales ratio might be 8. And keep in mind, this $25 trillion number assumes there's no Robotaxi network. Robotaxi generates outsized profits, and we're leaving that out of this. Let's put that together to talk about what Tesla stock might be worth in 2030, and soon we'll bring that back to see where that takes us to what the share price should be in 2020. We've got our $100,000 a share from the all-in Robotaxi model. We've got $25,000 a share from the battery revenue model. Let's just add in a few more scenarios. I'm going to leave out all analysis and modeling. I don't know where these numbers are coming from, but other people may have other ideas of what they think Tesla will be worth in 2030. So let's just throw in some other numbers. We'll consider three other scenarios. Tesla's worth $10,000 a share in 2030, Tesla's worth $5,000 a share in 2030, or the bankrupt scenario that Tesla is worth nothing in 2030, that the company fails. I'm not sure where other people come up with their numbers of what they think Tesla's going to be worth. I have not seen a sound business fundamentals explanation for anything less than the numbers I was talking about before, unless Tesla just doesn't succeed. If they don't execute, that they have problems, that something comes along. But there's nothing on the horizon that I see that stops Tesla from getting to at least the $25,000 model. And really, I think it's heading towards the $50,000 or $100,000 model. But regardless, we don't have to just take one model and say that's it. We can look at a group of models, we can look at alternatives, and then we can assign probabilities to each alternative. And then that helps us to figure out, well, what do I think the weighted average of these scenarios is? What does that lead to as a ballpark estimate of what the share price could be? And I want to be clear here, I think those low-end scenarios are extremely unlikely. I think bankruptcy is now off the table. Tesla has become so successful. They got so much cash. They're growing so rapidly. I don't see how bankruptcy is possible, but okay, we're going to leave that one in the consideration anyway, just to try to figure out what some numbers might be. If you're talking to someone who thinks the high-end scenarios, the $25,000 a share, the $100,000 a share, are crazy, and they come up with a number like $2,000 a share or $5,000 a share, just ask them, really, how many batteries do you think Tesla will produce in 2030, and what will they do with them? When do you think Robotaxi will happen? People who have these attitudes aren't thinking about business fundamentals, because when you get into the business fundamentals, you can only get to these high numbers. In order to get a share price below $10,000 a share, you have to get a really, really small number of gigawatt hours of batteries that Tesla's producing in 2030. Something has to have gone really wrong along the way. And that's just a big question, because it doesn't seem like there's any problem with CATL scaling up iron phosphate batteries. That doesn't require a whole lot of new technology. LG Chem and Panasonic scaling up nickel manganese or nickel manganese cobalt, not a huge issue. They're going to be able to scale those up. So we get to this scenario anyway, even if everything doesn't go well, we still get to big numbers. But let's work with it. Let's go with this idea that we have these lower scenarios, and let's assign probabilities. So the most optimistic scenario of this weighted average approach, I'm going to assign a 20% probability of achieving the all-in Robotaxi model and getting to $100,000 a share. I'm assigning a 25% probability of the battery revenue model getting $25,000 a share. Then we assign a 30% probability. The biggest probability is hitting $10,000 a share. Keep in mind, I'm saying less than a 50% chance of achieving the two models I talked about. In this scenario, we've got a 55% chance of valuation in 2030 of $10,000 a share or less, 30% chance of $10,000 a share, and a 25% chance of $5,000 a share. Again, this is an oversimplification. You could use a more complex probability thing with a continuous distribution if you get into probability and statistics and that type of thing. But I'm just trying to oversimplify here because this is a way of thinking about it. If you go with this approach, you end up with a weighted average of $30,000 a share. That's an expectation. If this is your probability profile for where you think Tesla is heading in 2030, you're looking at $30,000 a share as your weighted average estimate. Again, this is the optimist scenario. Let's look at some others. Here's a middle of the road scenario. A 10% chance of achieving the all-in Robotaxi result of $100,000 a share. A 25% chance that the battery revenue model happens. A 30% chance of scenario C with $10,000 a share. 25% chance of $5,000 a share. And a 10% chance of bankruptcy. You still end up with a weighted average value of $20,000 a share. That's a huge share price. So two models so far, two ways of looking at this so far. If you give any reasonable probability, any probability at all to the big number of $100,000 a share or the medium big number of $25,000 a share, that drives such a high potential value that you get this weighted average of over $20,000 a share or over $30,000 a share. Now here I'm going to take a more conservative approach. We take out the $100,000 a share possibility entirely. Say that's just not going to happen. We go with the battery revenue model having only a 20% chance of happening. We say 30% chance of hitting $10,000 a share, 40% chance of $5,000 a share, and a 10% chance of bankruptcy. This still gives us a weighted average of $10,000 a share in 2030. Now, again, keep these numbers in mind. I'm going to bring them back up later, and we're going to back this out to say, well, what is Tesla worth today if we think it's going to be worth $10,000 a share in 2030? Now, here I get more pessimistic. I take both the Robotaxi all-in model and the battery revenue model off the table. We go with scenario C, having a 33% chance of hitting $10,000 a share, a 34% chance, it's basically a 33% chance of hitting $10,000 a share, a 34% chance of hitting $5,000 a share, and a 33% chance of going bankrupt. And you still end up with a $5,000 a share value in 2030. Now, to me, these numbers are crazy. The chance of going bankrupt is way less than 33% at this point for Tesla. And taking out all possibility of achieving the battery revenue model, which is the stated goal that Tesla has set forth, that this is what we're going to achieve. We're going to do 3 terawatt hours that we're going to produce. We're going to get another 3 terawatt hours, or we're going to get more from suppliers. I think it's crazy to assign 0 to that scenario. I don't think it's crazy to assign 0 to the Robotaxi scenario, but it's crazy to assign 0 to the battery revenue model. And yet, here we go. We still get to $5,000 a share in 2030. And you could take a completely different approach. Warren's crazy. We're not looking at his crazy numbers. We're going to go with $5,000 a share, 4,000, 3,000, 2,000, 1,000 at bankrupt. We assign some probabilities, and we end up with, if you figure 10% chance of 5,000 a share, 10% chance of bankruptcy, and 20% chance of anywhere from $1,000 to $4,000 a share, you still get a weighted average of $2,500 a share in 2030, which is a lot more than $700 a share. It's more than triple the current share price. So now we're going to take all these numbers and we're going to look at how we can back this out and figure out what should the shares be worth today. So now we have a range of potential share prices to consider for 2030. We've got anywhere from $2,500 a share in 2030 to $25,000 a share in 2030. I had $20,000 in one version, $30,000 in another version. Let's leave it as $25,000 here. But let's look at the $10,000 case. Ask yourself this question. If Tesla is going to be worth $10,000 in 2030, if you're confident that's your best estimate and you're pretty confident it's going to be really close to that number, or your weighted average estimate works out to $10,000 a share, then you ask yourself this question. What would I pay for an investment today that would be worth $10,000 10 years from now? And you get there by thinking about what's called discounting. So if you invested in the S&P 500, you would get in the ballpark of a 10% or 12% return a year. That's the average rough return of the S&P 500 index over the past years, a 10% annual return. You can see the column here. I'm talking about potential returns. You could look at an aggressive scenario where I'm investing and I'm expecting to return 12% a year, which is probably unreasonable to expect to get a solid return of 12% a year. But let's say you're aggressive and that's what your number is, then you would get a discount factor. I'm going to show you how you get the discount factor in a minute. Or you might expect a 10% return, or you might expect a 5% return if you're doing relatively conservative investing. Think about it this way with the 10% return. If you invested $1,000 and it grew 10% a year for 10 years, where would it be 10 years later? You take 1.10, that's 10%. You take it to the 10th power, and you get 2.59. That's where you get your discount factor. If you did 1.12 to the 10th power, 12%, you get 3.11. If you do 1.05 to the 10th power, which is 5% return, you get 1.63. That's your discount factor. So now you take the $10,000 that you think Tesla's going to be worth in 2030, and you divide it by the discount factor. So if you were figuring I'm going to earn a 5% return on my investments on average, then you would pay $6,100 for an investment that would return you $10,000 10 years from now. You would pay $3,800 for an investment today that would get you $10,000 at a 10% rate of return. If you were expecting a 10% rate of return, you'd be willing to pay $3,800 today for what that $10,000 is going to be in 10 years. If you went with 12%, you'd be willing to invest $3,200. So let's be clear. If you think today that Tesla is going to be worth $10,000 a share in 2030, you should be willing to pay at least $3,200 a share for Tesla stock, and you might be willing to pay $6,000 for Tesla stock. That says that $700 a share is really, really cheap for Tesla stock. If you think it's that growth company that's going to achieve these incredible things, then $700 is a cheap price. If you are more aggressive like me and you're looking at maybe $25,000 a share in 10 years, then you'd be willing to pay over $8,000 a share for Tesla stock. That $700 share price is absurdly low from my perspective. I am very heavily invested in Tesla, full disclosure. 80% of my retirement portfolio, I think it's now over 80% with the latest increase in share price. 80% of my retirement portfolio is in Tesla. And I manage family funds, and I have two other funds out of my family accounts that I manage. I have two other funds that are over 50% invested in Tesla. I believe Tesla's going way up. I still believe in having a somewhat diversified portfolio, but I'm well outside of what I used to think was normal for having so much in one stock. If you go down to $5,000 a share as your expectation, you would still think Tesla is worth at least $1,600 a share today. And even if you go to the extreme low and you say it's only going to be worth $2,500 a share, which to me, that's an extreme failure for where Tesla should be in 10 years. But even at that level, you would at least say that Tesla's worth $800 a share if you were expecting to earn 12% return. This is why people saying that Tesla is overvalued at $700 a share or $600 a share are missing it. Even with a fairly conservative estimate of Tesla's value in 2030 of $2,500 a share, which means they accomplish almost nothing compared to their goals. They don't even get 10% of the way to their goals of battery production, using batteries, achieving Robotaxi. They basically achieve nothing compared to what they're going for. They just managed to continue building cars and grow a little bit. They're still worth $800 a share today or $1,500 a share today, depending on what your perspective is, what your investing aggressiveness is. So if you hear someone say that Tesla is overvalued at $700 a share, it's time to ask questions. Ask that person simple questions about Tesla's future. How many batteries do you think Tesla is going to be producing in 2030? How many batteries do you think Tesla will be buying from suppliers in 2030? Most likely they don't have answers to these questions because they're not thinking about the fundamental nature of the business. And do they think Robotaxi is going to happen and who's going to get there first, and will Tesla be successful in Robotaxi? A lot of people just think Robotaxi is not going to happen. I'm convinced Robotaxi is happening sometime in 2021, 2022. That we're going to see this incredible change in the world with Robotaxi. I think we're on the edge of it. We're really, really close. We're going to see the FSD4 chip. We're going to see Dojo running. We're seeing more and more vehicles getting more and more experience training the software. It's getting there. It's getting there fast. It's going to happen fast. And it's going to be 10 years from now, we're going to look back and say, why did people drive cars? We're not going to be quite, it's not quite that bad because there's still going to be cars that don't have self-driving software on them. But for most of us, like, well, why would I want to drive a car? People who think Tesla is overvalued simply aren't seeing where the fundamentals of this business are going. Look, I bought Amazon stock in 2013, and it's up like 10, 12x from what I paid for it. People back in 2013, I just saw it. I saw Amazon Prime. I saw a couple other things. I said, this is going somewhere. I'm not saying I understood everything, but I just had a gut feel. I think this business is going somewhere. And there were a lot of people saying, how people say the competition is coming, Tesla's not going to get there. Well, Walmart was the competition for Amazon, and they didn't stop it. Android was the competition for Apple's iPhone, and it didn't stop it. Apple continued to grow. Maybe the competition is coming, but that doesn't matter. Tesla is still going to grow like crazy. It's still going to produce like crazy. It's still going to sell like crazy. It's still going to make crazy profits. This is what's coming in the future. And anyone who doesn't see it, just challenge them. Well, where's this coming from? Oh, well, Ford's making the Mach-E. Oh, Ford's making the Mach-E? They're hoping to make 50,000 models of the Mach-E. They're hoping to make 50,000 units of the Mach-E in 2021. Tesla's going to make 1 million fucking cars in 2021. So 50,000 is not competition. 50,000 is a blip. Okay? Ford ain't close. No one is close. There is no competition on the horizon that is anywhere near what Tesla is doing. And Tesla is innovating faster than everyone else, and they're growing faster than everyone else. This is insane. Tesla is going to blow up like you cannot believe. And anyone who says otherwise has their head up their ass. Somebody tells you about the Ford Mustang Mach-E, just ask them, Gee, how many Ford Mustang Mach-E's will Ford make next year? Uh-huh. And how many cars is Tesla going to make next year? Is that really competition? What plans does Ford have to scale up the Mach-E after? They don't have plans to do this. And the Ford electric F-150 is going to be nothing compared to Cybertruck. And Tesla's innovating faster and faster, and the new Model Y is going to be better than the current Model Y. They're going to upgrade the Model 3 with the structural pack. You're going to see the compact Robotaxi in 2023. Nobody has vehicles like this on the horizon. Their horizon doesn't even include vehicles as good as what Tesla's making today. So challenge anyone who tells you that Tesla's overvalued to back up their numbers with business fundamentals. What are the business fundamentals that you see? Where do you see Tesla in 10 years? And they're not going to have an answer because they haven't thought about it. So click here to learn more about the battery revenue model, and click here to learn more about the Robotaxi model. Please support this channel on Patreon by clicking the link below, or buy a shirt like this one. Lots of shirts. Links to the shirts are below in the description. And thank you for watching.